Yo, what's going on today, brother? So today we're going to be analyzing the stock market. I'm going to be telling you what my opinion is if the market's overvalued, why people are investing in the stock market, where the stock market has gone in the past year and the past months, if I think it's overvalued or undervalued, and how to prepare for an upcoming stock market crash and other things, etc. So furthermore, I appreciate you stopping by Brotherhood Finance. As always, please like and subscribe. I appreciate you joining the Brotherhood, and let's dive into this video right now. So let's look at the Dow. So the Dow Jones Industrial Average, people look at this as a very good measurement. This and the S&P 500 as into where the market's at and how it's performed over the coming years. So if you look, this was in coronavirus times. It got down to 18,000, and before then it was around the 29,000 range, and now we're at all-time highs at 30,000. You got, the coronavirus, which really impacted business operations and cash flow. But then you had stimulus getting pushed into the market to keep the market high. I remember Trump talking a lot about that. He wanted to keep the market at all-time highs. And then the same thing if you look at the S&P 500, it dove down to around the 2,200 range, and now it's back up to all-time highs at 3,600. And previously, before pre-COVID, it was at 3,370. So now let's look at some overall charts. Now in these charts we're going to dive into, we're going to be looking at the PE ratios. So what is a PE ratio? A PE ratio is the price to earnings ratio. So we're going to be looking at large cap, small cap companies, and the overall broadens where the market is and if it's rich or overvalued or undervalued. So if you look here, this is the NASDAQ composite high in historical data. So first off rip, if you look at 2019 and 2020, we have a 40% increase and a 35% increase. And in 2018, we had a little bit of a downtrend. So what that's showing me is that the market has gone up substantially in the short coming years, and it's probably due for another correction. So if the reason why I said that, so if you look back at history, as we know, history repeats itself. 1997, 1998, 1999. This was right before the bubble. So in 1999 and 2000, there was the crash, because the market was in a bubble, and I believe we are currently in bubble territory right now as well. So after those 3 years of good profits and percentages, the market had a drop. Now if you look at this drop, that's 40, 50, 60, 70, 80, that's about a 90% drop in the market on stocks. So now let's look at where we're at today. So again, like I said, the last time it was this high was right before the bubble and before the other crashes. So this is large cap companies right here. So the S&P right here. So as you see, it's sky high. The last time it was even around this territory was back in 2000. This chart doesn't go far back. But again, this PE ratio right here for the large cap companies. And the large cap companies are really what's moving the stocks. And if you want to know, well, why is the stock market at its all-time high? We go back to, the Fed's rate and pretty much the rate that you're going to get on interest for saving money. So savers are losers. If you read the book Rich Dad Poor Dad, you learned that savers are losers. The rich invest in assets, and the rich don't work for money. Now, the reason they don't work for money is because they have assets that create the cash and get them rich, as well as tax write-offs, such as real estate. You can use that as a tax write-off and pay no taxes. We'll be diving into that in further videos. But so again, there's major fears of this rising. Therefore, again, it could hurt the dollar more. And right now people are getting loans and they don't want to send a whole bunch of cash, so the market's at all-time highs. So this is the main forward PE. As we saw again, the last time we saw these levels get this high was back in the bubble. As you can see right here, this is the median S&P 500 forward PE ratios. It was around the 20s, and we're just pushing that territory right now. Although we have the vaccine and other things coming out, if you look at a lot of these companies, a lot of them are really overvalued. So what I mean by when they're overvalued is they're already priced in for perfection, pretty much. So if the stocks are already priced in perfection, there's not very many good deals. Now most people, they look at the stock market and they're going, well, it's at an all-time high, and they have the fear of missing out, or FMOO. And what happens when you have the fear of missing out is you have all these people diving into big cash assets, and they're the large cap companies that typically move these, but then they're overvalued and they're saturated. So when a correction occurs, That's when people get scared. But really, the best way to get rich is investing in the crashes. All right, brother. So now the next question I typically get after explaining the market being overvalued and the large cap companies being saturated as well as priced in for perfection, how can you prepare for a crash and what do you do in a crash? Well, the first thing you want to do is first you want to make sure you're sitting on cash. So the biggest thing that you can have is when you have a lot of cash, you can make those big moves into when the market dips. So Warren Buffett, he always states, you want to buy when there's blood in the streets. And I couldn't agree with that statement anymore, because most people, they buy the stocks when they're at all-time highs, when really you want to buy them at the all-time lows, which is how you get a better rate of return or return on investment. Because when you buy at a lower share price, when the market's down, that gives you a higher substantial gain over long term and even short term in that method. So the first thing you want to do is make sure you're sitting on some cash. So it's always good to sit on at least 30% of your cash. Currently, I'm probably sitting on about 70% or more of my cash because I believe when the market does crash, that's going to be a good time to invest your money and get a higher return on investment. And the second thing you can do is in some of those companies that you're already up 50% or more, or you're doing well in, take some profits. It doesn't hurt to take some profits just to have some extra cash flow around to invest when the market does go down. So that's the video for today, brothers. I appreciate you stopping by. As always, please leave a like and subscribe to our channel. I think the market is overvalued. I think we'll probably see a correction once Biden gets into office, probably around the February times, especially if we go into lockdown. Although I cannot see into the future, I do think stocks are overvalued. I do think we'll see a correction probably in the coming months, and if not next year, the year after. But that's the video for today, brothers. I appreciate you stopping by Brotherhood Finance. Please leave a like and subscribe. Don't forget to use our links up in the top right-hand corner for a free stock or $5 free for your Acorns investments for your Roth IRA, your Coinbase to get in Bitcoin before cryptocurrencies explode, because as we know, the dollar is going to trash. They're manipulating it. They're printing a whole bunch of money. So make sure you take advantage of cryptocurrencies. Fidelity for the high growth stocks that we talked about previously. And follow us on Instagram and then also TikTok at Brotherhood Finance to get additional content and stock updates like the one we just put in. TTCF, that company went up 12% the day after we posted about it. So you're missing out on some potential high gains if you don't follow us on our social medias. But I appreciate it. Have a good rest of your day. Peace.